Hello, my name is Benjamin Hart. I'm an American attorney, the managing director of Integrity Legal here in Bangkok, Thailand. As the title of this video suggests, we're discussing the PND 51. This is the semi-annual corporate income tax form, which needs to be filed, as the title suggests, on a semi-annual basis. There's another video on this channel describing the PND 50, which is kind of the big kahuna of all the corporate tax forms. That's the one that needs to be filed on an annual basis. It also requires things like a balance sheet, audited financial statement, and that's sort of what we think of when we think of having to close out a company's taxable year and assess the taxes associated therewith. We're thinking about that in the context of the old PND 50. But with the 51, this is dealt with on a half-year basis. It's actually relatively new. I believe this was brought about in the opposite administration here in the Kingdom of Thailand, and so it's not even, well, might be about 10 years old. They're getting on to about 10 years old that people have been doing these. But this semi-annual audit, some of the accountants in the office have noted to me that they get a little frustrated with this document as it requires a certain level of sort of prediction with respect to what the end of the year audit's going to look like, and that can be a little bit troublesome for them. But that being said, it's a much more truncated document compared to the PND 50. It does require the assessment and the payment of some taxes, you know, sort of for the half year, but then you're going to go ahead and deal with matters pertaining, you know, to the end of the year later on down the road. So my personal opinion is it's a good way of the Revenue Department keeping everybody on their toes so they don't sort of get lax in the middle of the year and start, you know, losing documentation. I've actually heard Thai accountants tell me they actually kind of like it. Possible reason for that is, you know, it's more accounting work, and that's always good for accountants. But it also could be that it does kind of require everybody to sort of stay up to date with their corporate documentation because, you know, you've got to deal with this half-year filing, and in dealing with that, you know, it requires you to sort of keep up with documentation rather than dealing with things on sort of a year-to-year basis. So something to think about, the PND 51, again, the half-year, for lack of a better term, the half-year audit, if you will, probably the wrong thing to call it, the half-year tax assessment on a corporation needs to be dealt with 2 months after, within 2 months following the 6 months, the 6-month interval from the closure of the company's corporate year, or fiscal year, I should say. So if a company closes out at the end of December, then you're going to go ahead and move around to June, and then 2 months after that is when you would need to go ahead and file this form right here, or you need to do it within that period in order to remain in compliance. Failure to do so can result in fines and penalties, and you know, nobody really wants to deal with that.